Hi, I'm Mel Lopez, Chief Economist for ASEAN.
And I'm Peter Lundgren, founding CEO at Lundgren's Capital.
Welcome to Sound Economies with Mel and Peter, an East Meets West podcast by Lundgren's Investor Insights. Here we share what we're focusing at in economies and financial markets from the developed and the developing world. Hi, Peter. How are you this week so far?
I'm doing good, and the week is busy as always, but extremely busy. And then I have also been busy reading your latest magazine, the ASEAN and
Yeah.
China Quarterly. China is interesting. So the Chinese articles were actually really interesting, but also the article about unicorns or the startup scene in the ASEAN countries I like a lot. So thank
Yes.
you for that, Mel.
That was very
How's your week?
Oh, yeah. We started it very strong with the release of that China and ASEAN Quarterly magazine. So that's our first
Yeah.
for the year. And we have more to come for the rest of the coming months. It is interesting, Peter. So we had a lot of China articles in that issue, and some of it are recurring themes from our podcast episodes. So we're actually really seeing it through at least these topics, especially, global
Yeah.
trade issues wise. It's a very exciting space.
I agree.
And
Exactly.
heading into our podcast today, we have quite a full plate. And today we'll discuss here in Southeast Asia, Thailand's foray into the casino space. And
Mm.
then when we move to China, we're seeing a good performance by their technology stocks. And we also discuss the arms race between China's BYD and American brand Tesla in terms of the electric vehicle market. Then we'll discuss trends and US inflation. And as usual, we'll tackle our global outlook. I'll get it started,
Exciting.
Peter. I'll talk about Thailand. So, our neighbor country here in Southeast Asia is
Mm.
moving into opening up its domestic market to global casino and entertainment complexes. So for the
Yeah.
longest time, gambling has been considered illegal in the kingdom, and but they're trying to get it going within the year, so quite fast. The cabinet has already approved the plan in January, and they want to develop entertainment cities kind of thing where there's a huge sprawling complex that hosts stadiums, concert venues, event halls, and then of course included in that are casinos and gaming tables, patterned
Mm.
after what's known from Singapore and Las Vegas.
Mm.
So it's up to Congress to enact the law, but the Prime Minister wants it done by June. So that's a few months from now. And
Yeah.
the
Yeah.
rationale is really they want to it's kind of an underground operations happening right now. What's legal in Thailand is lottery and horse race betting. So if they do
Yeah.
allow casinos just like the rest of its neighbors, it could be a potentially strong revenue source from Thailand, and it could be strategic
Mm.
because GDP growth has slowed a bit relative to its neighbors.
Yeah.
It's lagging behind. And
Mm.
to see it is, kind of a commitment that they want to restart or rejuvenate GDP expansion,
Yeah.
which has slowed. And on top of just providing cash handouts, this is quite encouraging, Peter.
Thailand seems to really to go all in on,
Mm-hmm.
I would say, travelers. Is not so as solely tourism, and as you say, if they open up for the casino industry, they, of course they try to attract high-end travelers. Let's put it this way. And then if we look into to Las Vegas, one thing is the gambling and the gaming and everything that's well known for, but it's also an extreme convention industry they have as a
All right.
it's a big business. Yeah, I
Mm-hmm.
would say if Thailand managed to attract this kind of extreme big conferences, conventions, everything, then there's a a very positive dimension in this sort of say new suggestion and a new strategy. Um, that I would say that is interesting
Yeah,
to
there's more
just
reasons to
to
travel.
yeah, to attract more tourism
Mm-hmm.
is not necessarily the most fantastic deal, yeah. But if they can get the full spectrum of all kind of travelers, that is interesting to follow. Of course, also for investors, absolutely.
Right, Peter. Moving on to China, Peter, we've observed something interesting evolving in the Chinese market.
Yeah, yeah. This week, actually, the Chinese tech stocks, so to say, went into to the bull market area, meaning it's up more than 20% since the low. It is actually pretty interesting because it also like we've seen in the US, as the tech stocks are lifting the whole market. The stock indice that we look a lot at is
Mhm.
called HSCEI, and that is a Hong Kong-based red chip index. That's basically predominantly consisting of large Chinese companies that also have their stocks listed in Hong Kong. And this index is sort of showing the development for these companies. It reflects a bit how our own along with West China Fund is positioned. And this stock index is up today, as we speak here, is up year to date since the 1st of January. And also today, it's the 13th of February. The market in Hong Kong just closed, and it's year to date up, I think it's 16.5% in local currency.
That's strong.
And at the same time, S&P 500 in New York is up 3% for the same period since the start of the year, also in local currency, but the Hong Kong dollar and US dollar is sort of following each other here, so we can compare. That is interesting, and it's also interesting to see that we have just had the Chinese has just celebrated the Lunar New Year, and before the Lunar New Year, the Chinese stocks were actually trading quite positive, but also after the Lunar New Year, this trend has actually intensified, and it's not so common. We see on both sides of the Lunar New Year that we have sort of the same market sort of conviction, so to say.
Mm-hmm.
And that is it is positive, and it remains positive. And we know there has been a Trump fear, and
Yes.
everybody's been waiting. What will he do? How many tariffs will he impose on China and all this stuff? We've seen a bit, and more will come probably, but at least a bit delayed, and that leads to people to continue to be optimistic. And the Chinese tech stock sector is much more a domestic story. It is not that dependent on US. I know we have the TikTok story, but
Yes.
this is pretty interesting. And right now, it sort of confirms our own view that we remain positive, and we should see it last year was also a very good year for Chinese stocks.
Yes.
Just to do some, we do some promotion, of course, for our own stuff, but our own Long-Squeeze Invest China a mutual fund that is in euro, listed in Europe, but was up 31% last year. And that is decent. 5% was around, we could say, is a currency effect. So if we convert it into US dollar, it would be like 26. And still, it's also have 5 stars at Morningstar's rating. And there's only 5 funds in the whole world, that has 5 stars, and we are one of them. So among these high quality funds, we actually had this really, really good gain last year, and it
Mm-hmm.
continues this year. And that is interesting. Still, truckloads of investors are under-invested in Chinese stocks, and that particularly European investors. So it is quite interesting, and the game is, of course, to see what happens if Trump starts to impose more tariffs. How will the market absorb it? We think it's pretty robust, actually.
Mm-hmm.
So that is an interesting story, and that was sort of based a bit on the tech stocks going into the bull market area.
Right. I think, Peter, this also confirms our discussion a few podcasts ago where we identified as a mega trend for the year that the stock market rally globally will still be led by technology companies or tech stocks. Only this time, it's Chinese stocks taking the lead,
Yeah.
unlike last year, where we saw US tech stocks really rally. But it's still quite early into the year, and a lot has happened already. Actually, speaking of tech stocks from or tech companies in China, I'd like to move to BYD. So, the private electric vehicle manufacturer has been taking strides or taking advantage of the DeepSeek technology that has erupted, shaken up the scene the past few weeks. It is trying to integrate DeepSeek's product or learning language model into its EV cars. And it's been said that they will introduce it for fully autonomous driving. And that's a space which previously the American brand Tesla has made a name for itself. Now it's here comes a challenger very quickly as well, just as fast as DeepSeek came to reign on ChatGPT's parade, so to speak. And BYD has already been a formidable competitor for Tesla. In the fourth quarter of last year, it already
Yeah.
beat Tesla in terms of production volume. Although Tesla is still quite ahead in terms of sales or deliveries as it brands it, BYD has, a lot more space to grow, and it has captured the domestic market really well. And considering the size of the market between China and US, it really has a big captured market, so to speak. And now that it's tapping DeepSeek, you just know that it will mean that the autonomous driving service or feature of the cars will come at much cheaper rates, because we know that BYD units are much, much cheaper than what Tesla sells for. So it's a very interesting space, and this has driven Tesla shares down so far this week, or actually coming from last week. Yeah, it's a very exciting space. And just like to point out, BYD is calling that feature as God's eye self-driving technology. So kind of a branding win so far to see it like that, Peter.
It is a fascinating story, actually, um, particularly with the BYD and also in general with the Chinese EVs.
Mm-hmm.
I had honestly, I for years back when they sort of started to try to enter the market, I really considered the quality as being completely crap, and it was so far away from being something that could say drive on the roads outside China. Yeah. It's what was amazing is they had some tailwind with the whole EV development, of course, but how they have adjusted and improved the product actually, and that is still a bit of the DNA of the company. They do upgrades pretty fast still,
Yeah.
as the quality of the cars and the design of the cars and being smart and whatever. Yeah, that's impressive. That is part of let's put it this way of overtaking some of the Western competitors. Uh, that they simply they renew themselves much faster than what we used to see, particularly in Europe. Yeah. And that's impressive, honestly. Do we remain bullish on these on the sector, uh,
Yeah,
Mel?
it actually, bolsters our view that really the growth here in China is very strong. Headwinds aside, of course, we recognize that there's some, turbulence going on, especially with the uncertainty of the size and scope of
Yeah.
the Trump tariffs. But yeah, these kinds of
Mhm.
developments bolster how fast
Yeah.
things could evolve. And whenever something is
Yeah.
thrown towards their way, they find a way very quickly to navigate it and get past it, Peter.
Mhm. And that is the interesting part, and it's all it's quite a big company now. It's a big operation. It's a big organization, but they still manage to maneuver like they were much smaller.
Like a
So
startup.
that is impressive. We know that Trump, he wouldn't like to hear this conversation, but after all, that's it's how we see reality. So just if Mr. Trump, he should listen in, yeah. But otherwise, should we jump to Trump's own country?
Yes, let's do that, Peter.
So
So earlier
yeah,
we mentioned that we would like to talk about the latest inflation data coming out from the US.
yeah,
It was at 3% in January. So it picked up from the previous month's 2.9%. A
yeah,
lot of the conversation, Peter, is mostly ranting about egg prices, but it's much more than that.
yeah. We consider it as, how to say, it is noteworthy. It is really, we need to have a look at the US inflation.
Mm-hmm.
Doesn't matter a lot. It came out as 3% the other day for January instead of expected 2.9.
Yeah.
Does it tilt the stock market or does it mean extremely lot? No, not the number in itself. It does not. But let's say, as you mentioned, the eggs are famous now. It's been a situation since long actually in the US. There
Yeah.
is a shortage of eggs. The egg production is somehow, as it can't cope with the demand. And now there is a sort of a bird flu as well on top, so the egg production is even lower. And we know, as this is seen thousands of times in any economy around the world since several hundred years, it happens. What are the consumers doing? They substitute with something else. Yeah, and then you could say it's hard to substitute eggs in many products correctly. But end of the day, people in the U.S. diners across America, they will simply have order less eggs sunny side up, and then we get more hash brown potatoes. Yeah, that is what happens in the diner at the end of the day. So if this very small component of the U.S. economy shouldn't attract so much attention, so it doesn't make us nervous. Yeah, we know the consumer will survive and adjust. Yeah. Anyway, but there is another story, and that
Mm-hmm.
is it is a reminder that the inflation is not sort of under control as we would like it,
Yeah.
and that is the key. And as I was saying, the U.S. Central Bank did a fantastic job in getting inflation, what we would say, very much under control. Did a good job, and they was, as always, excellent in communicating with the financial markets.
Mm-hmm.
Um, as they just do it in a very superior way compared to any other central bank in the world. So praise for that. But
Yes.
the inflation coming down from the high inflation period to a more sort of towards the very much desired 2%, and though that is a bit more pragmatic in the USA, they also mentioned 2%, but they can live with something different.
Mm-hmm.
But it is still there, and inflation can pick up at any time. That is sort of what we argue all the time. The economy is not in such a full balance that inflation is under control. And in our view, the risk is on the upside. It's not that the inflation will drop out of the bed and then go extremely low. Um, of course, if energy prices should drop extremely, then that could
That's
happen for a
another
period.
problem.
We don't see that either. So this is the upside risk all the time. And even here, as I know, it's as we can't open the window and then forecast on what we see out of the window. That we can't use that to forecast the economy. Yeah. But then
Yes.
we can feel in our own company how much prices are increasing. Everything we purchase, we use, and everything, we still observe a lot of price increases, and meaning that basically what we're seeing is that producer prices are rising in our own within our own field, yeah, and that is outspoken in the US, though less in Europe. Uh, Again, the inflation threat is always there, and to convert that into what does it mean for investors,
Mm-hmm.
we have seen the right away action. Okay, stocks they drop because yields are going up.
Yes.
It fits into our view that Fed, the U.S. central bank, will not cut as expect as hoped. Yeah, this this fundamental tailwind for the stock market this year,
Mhm.
we regard it as gone. As there might not be any further
Oh,
rate cuts, yeah, and that would be a bit negative surprise, honestly.
yes.
But also looking at where the mortgage rates are in the US, they need to come down maybe with 2 percentage points, as from 7 to 5. Let's put it very broad, yeah, to get the housing market really to sort of back on the move, where a lot of people are sort of active in buying, selling houses, and the private households as they get active again. Yeah, that is
Mhm.
sort of a lot of forecasts that we look into, and that is far away. So we will see this bit more static situation also for U.S. households this way around. Yeah, uh, of course this is completely against what Trump is trying to elect as a promise his voters, but that's just the case. Yeah. Um, so this is for us the key takeaway from this week's inflation data from US is it is the upside risk can very fast sort of explode uh, higher, and this will uh, lead, as we say, to more volatility this year, a bit more nervousness. It's harder to see the stock market just going up 15%, all this stuff. Yeah. So this was just another confirmation of this picture. But that's
Mhm.
why it's not so much that it was 3 instead of 2.9. It's more where we are. Yeah. What do we think about if U.S. inflation should sort of move a bit
Sure.
higher?
Oh,
What does it
right.
mean in the Southeast Asian region there, Mel? Anything at all? Or
Especially for smaller open economies, for example, like the Philippines, where or
uh,
maybe a market like Hong Kong, where the central banks here very much track the moves of
uh,
the Fed.
uh,
So higher for longer in the US would also mean higher for longer here, even though
uh,
the inflation problem may not be as alarming.
mm,
Sometimes it's the safer option, especially if you want to keep your rates competitive. That's what markets like those markets do. So, um, although the tariff risks, for example, is not as big as faced by China, for example, there's always that, nagging concern, and that even if Trump does impose the additional tariffs on Chinese products, it's gonna still spill over. So the response really is to keep rates high because you want to keep inflation steady. It's
uh,
given that it's not gonna be low as what central banks would like it to be. So you have
uh,
to accept and make do. That's the response.
uh, exactly. Yeah, interesting. We alert. We look at it. We jump to the global outlook and how we see
Yes.
the world. Actually, as this conversation indicates, we see a lot of opportunities.
Mm-hmm.
Global economy is for investors, and it also is a headline. We see more sunshine than anything else.
Of
We are
course.
talking about the clouds on the horizon. It's not yet. We
Mm-hmm.
remain overweight risk, meaning overweight stocks. We are happy for credit risk, whatever sort of is a bit sort of risk components in the profile. We still
Mm-hmm.
see the upside in general. A lot can happen, like what happens with the Ukraine
Mm-hmm.
situation with Trump and Putin speaking together. We don't know, but still, we actually see the markets as so robust that they will cope. Um, is that sort of corresponding with the Asia view, Mel? How are we?
Peter, so towards Asia, China in particular, there is still some jitters felt. Of course, Trump is known to, surprise when the timing and the scale and the size of the tariffs that he wants to impose. So that's a major source of uncertainty, so to speak. But when we see developments like what we talked about earlier regarding domestic Chinese technology companies, it's something that perks up investor interest and market sentiment towards the region. And it kind of shows that even if you have these global volatilities, there are still innate sources of growth that investors can look at. And that is
Mm.
a continuing source of encouragement that, oh, this is a good market to invest in. That's why we're overweight
Yeah.
here in terms of our positions versus maybe the mature economies or the Europe side of the world, Peter.
Yeah, good to hear. And so we continue to look at the upside. We are aware of risks, but we actually consider the world as offering a lot of opportunities still. So that is good.
Yes, as usual, Peter, thank you for sharing your views with us, and thank you to our listeners for tuning in.
Thank you for being here.
We'll be monitoring global developments and we'll share what's interesting in the next episode of Sound Economies, Mel and Peter on the Global Financial Markets, a podcast by Longines Investor Insights. Thanks for tuning in. For expert insights on the go, download the Longines Investor Insights app for free. For investors, we offer very exciting and high quality alternative investment funds, including our top rated Mutual China Fund. To know more, visit longinescapital.com.